Good morning, SMF, MMTs. It is a new year. It is January 1, 2011 at 10:23 a.m. Pacific Standard Time, MMTs. And the thing about it is we have completed 2010 here at stockmarketpundit.com and how right we were through the whole year. And January, I will be writing the yearly formulas for the full trading year of the Dow Jones. In some week of January, when I can get the right numbers, I write a weekly formula. And one of the things that we will be highlighting with SMF MMTs is the 2010 formula, which was done, and we were talking the same way 1 year ago. So what we will do is have a special video series on our Dow formulas. That's for a whole year of movement in the Dow. And that's directional movement up. That's directional weekly movement down, weekly movements up, weekly movements up, and weekly movements up. But this, for the year, is what we're taking a look at. And we have yearly formulas that we put together, and they don't change. This is a weekly chart, MMTs, and down here a delta movement for Monday's trading. One full delta would be 67.09 as far as the Dow movement goes. That's that movement there. That's that one delta movement there. Okay, that's in your SMF platform, which is here in your brain. And that's what that really is. I have to have that. That's not a teeny value. That's a one delta value. However, when you go into the brain, it'll tell you right on the end that you're working with one delta calculation as far as the indexes go. We closed at 11,578.72. Now, when we look at things, MMTs, on that weekly level, is one of the things that I want to talk about is the 2011 current trend cycle. We're going into earnings season this month. It'll be the first quarter for 2011 earnings, and we have topped out down back over here at this time frame. This was way back when, and we can take a look and see what dates that these come up, because they go back in time where the trend started. We can see the week of 12/20 here that we had a Dow weekly chart that was closing below the half bars. So when we put this bottom in down here to that delta, the thing about the SMF platform, it prices the public transaction to Wall Street. And everyone is public except for a floor specialist on the NYSE and a market maker on the NASDAQ. And this platform is based on a market maker platform. So it's not your little yo-yo retail platform. If you want one of those, they're everywhere on the internet. Go get it. This one has accuracy for MMTs and will always. So basically in the 2011 top, that when we open up, we had this last weekly 4-week breakout. Wonderful December again. Now, the trend started back in September 1. That's when we were covering all our shorts back here in September. August, we were short 3 weeks, but this is where we started getting on board now. How far it would go, no one would ever know. This move in September, by the way, had not happened. You have to go back 71 years in history in order to get that September move. Okay, to get an October move, you still have the same type of things that were occurring 71 years ago in those particular 2 months, which are generally the worst down months. How far the indexes would go, no one knows. But let me tell you what happened in 2010. There was a lot of outflows at record levels in mutual funds. There was lots of outflows in advisory funds, and lots of things like that was happening in 2010. What's ironic is when those big distributions were taken, this is where we got the best weekly breakouts. Okay, because when we were over here with this big correction right here, we were at a certain place in time right here, MMTs, that we had shorted this move. This is where the capitulation came in And in May, it got real bad all the way down. And you can see right here what a movement that was in this one weekly bar right here. And this particular weekly bar was way off of the charts. And we got to go way back in time when that March top got put in. We came all the way down. We were telling people back over in the first year MMTs that this is where all the exuberance moved in, and we finally got the weekly reversal, and what a nice one it was. And we put in that bottom down here in that June cycle, and we had a nice 1 week breakout. We consolidated right here toward the half of that breakout bar. We broke up to the top up here, slide that 3 week bid in August. We were short. All the live videos for shorting August was there. We covered and said it was time to get long in the options market, up and out of the money, and it paid. How far it would go in September, we didn't know. We're not going to claim that we did. But we said that this downtrend was over, and as long as the buyers and sellers in the public tape, and remember each one of these lines for Monday, it's part of past behavior. You can see how the public transaction model works in the exchange model, which is the public model. They make decisions basically and they all make decisions chasing markets at the very same mathematical lines here in your platform MMTs. So their performance level, the public model level, is always working on the same standard technical analysis they always do. Well, when you're an exchange model based market making firm such as SMF and the SMF market making school, is that we look at things in a whole different light, which is a much better light with accuracy. And what it does is that we always have the public priced in our platform, and all of the mathematical equations to where the public will make those transactions before the public even gets there. And that's what we're going to talk about today, MMTs, is that as we start the new year off, we're very, very complacent. We're at the highest range. We closed up toward the highs. There's nothing wrong with these bull breakouts. They're wonderful. However, you got to know when these days are going to come and these weeks are going to start again. Or when this kind of week, this is last January, we sold the short, we got long when no one else, how far it would go, we would let the buyers and sellers be in control. But our platform was just kicking butt and telling us exactly that, these big movements on half of the bars, when we go back in time, we can look at all of the mathematical equations, how much they were closing below half of the bar, what the weekly range was. This last week right here, MMTs, was 106.56 movement, the last trading week. Basically, that's 106 up or 106 down. That is the raw weekly movement. That's what your platform tells you to do. So we're going to take a look at this part of the trend right here, where we came up off of this lows back over here, and where this September move started, and how the short sellers were being taken out all the way up, and that provided us good long positions to the top of this reversal. And we had this nice, beautiful reversal in November. They shook people out. They took distribution. So kind of like, think of it this way, MMTs. What they normally do in September and October, they put it on hold. That was your pre-Christmas rally, where when we started getting into good historical months of November and December rallies, well, we still went higher. But we didn't have the weekly breakouts lately in some of these now. These are narrow range weeks. Yes, we had one good mathematical week up, and this was a nice move. This is where it started, and it maintained the high of that diamond right here on this weekly level, and it maintained half of that. So there was all the reason to buy during this light volume moment of these particular weeks, and all the weeks are in your platform. We'll be training the new SMF MMT students that these half bar weekly bars are right to the penny, and they equal strength and weakness. And basically what we see is that we're going to watch that buyer and that seller again. and we're going to be looking for a weekly move that starts. We are going in to all-time highs, which is very bullish. However, the problem that we see, MMTs, is that we're going to put in an exhaustion top. And this top that's going to be put in, which will also be part of our yearly formula for the whole Dow Jones, will happen sometime in January. And we have the previous year's formula as to how accurate we were, right on the money in directional movement. Buyers were here, time to be long. Sellers were here, time to be short. And that's what we're going to be monitoring over here in the system. When we start to see weakness on a weekly level moving forward, is that we're going to take a look on a reversal from the previous week. So if we start out and we start to gap down and we can't, this is what a reversal would look like, MMTs. It would be the half range is 11,571.72. And if I'm below